The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, welcome back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN, coming to you live on Tiger TV at TFNN.com, on your mobile phone at TFNN.mobi, and also live inside the e-Signal platform. And let's catch up where the markets are at right now. I'm going to get up a market monitor for me real quick, and we'll go through. We'll also go through the news for you and what's coming up next week. Hopefully we have that all updated. And we'll be ready and hopping on each piece of that for you. One thing I want to go through is just look at some of the top news stories. We may do that here in just a second as well. So we'll cover those and maybe throw in a few lessons along the way on some trading. So just, keeping you up to date, but also, trying to give you some education as we go. So right now, looking over at some of the top news stories, what we got going on, Wall Street. Sort of going a little bit lower right now with the weaker earnings and the GDP. We had the advanced GDP come out this morning. Came in at 2.3% on expectation of 2.6. So that's a decline in GDP. Not really a surprise, but it is being reflected in the market. And, over here, had stocks fall late in the morning on trading, today. And basically they said the economy expanded slower than was supposedly expected. Bringing up a chart on that, we'll see where does it look like right now after the afternoon session here, because like I said, we moved down, but it looks like we're trying to pull on back up. And you can see as the news came out, this is this morning right here, right when the news came out, and I want to say that was at 8:30, wasn't it? So we'll look at that. Came on in at 8:30 a.m. So looking on over here, right here at 8:30 on the charts. The news was released right about here. Had some oscillation off of it. A little bit surprised. Really not a massive change. When you go back, I always find it interesting to look at the news and then the reports on the news and what they blame things on. And, sometimes you'll see like little to no movement on it. We really didn't get a lot of movement on it, at least on the Dow. On the Dow, we can see it came on down and it sort of bounced around. It did finally pull down to 0.7 deviations, and that's going to be pretty close to a 1 deviation whole move right there. It bounced off a lot of strong support from yesterday over there on the Dow, and broke through the ice a little bit with some pretty good volume in the process, but just had so many support levels. You can see all these little green lines, so many support levels from previous days, and it just kept breaking one after another after another after another. Created a few new ones of its own, started moving on back up. And into, the volume areas, there was there was a lot of volume from yesterday, that it had to overcome, but moved back up into that level. And right now it's basically done what we call a gap fill. This morning it started off with a little bit of a gap on settlement, this line right here. Okay. And it started heading on down and did so with some pretty good volume all morning right there. So the announcement comes out and, we had pretty good volume in the morning, but it wasn't going anywhere. It waited for the market to open up. The market opened at 9:30. All of a sudden, it started heading down. And again, volume just, ever increasing until it finally starts exceeding expectations. Boom, 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 boom. And then it drops off. And this is a big thing that I like to teach people is notice not only the expected volume when it's exceeding expectations, but notice when volume drops, when it stops. Okay? Because we've had this volume increasing all morning. That just adds to... Okay, we're in what's called an accumulation phase, okay? And so they're gathering up shorts right here, waiting for the market to open. The market opens right here at 9:30. And then all of a sudden, as soon as the market opens, watch this. Market opens, all of a sudden that volume starts increasing, which we expect. Okay, we expect the market to go up, but the volume to go up in the morning. But it starts increasing, and then it hits sort of a peak. And then it doesn't go back above that peak, and that's right after we break through, ice, right? We break through that 0.5 deviation level, and we break through, support level, an institutional level. We break through a lot of different levels. It starts peaking off, but it can't bust back above it, and volume's still declining, and declining more, and declining more, declining more. Finally, we start getting a trend saying, hey, you know what? There's chop, there's potential long move going on over here. We're sitting right at all the support, right at this negative 0.7 deviation. Starts moving back up, still not on incredible volume in the process. It actually busts back up a little bit above ice, right here, right above this 0.5 deviation level, with volume that's not exceeding expectations. So what we're really looking for now is it to come on back, and so it busts right through there again, really not exceeding and growing. Looking for it to come on back up with a little bit of growing volume. Comes up, fails on that, comes back down, does a head fake to a lot of people right there. Finally, we get a long confirmed trend, and we actually are staying above volume, and we actually do get a little bit of exceeding it with a little bit of an incline in that process right there on the volume. Actually starting to improve a little bit. When that happens, starts running back up. Usually that's going to put our target right there, right around 17.7. 17.7 would be the target. We're going to have to break through settlement. That's going to be the hardest level for it to break through. And we can see it right now. It's sort of going up, and a couple points off, going up, a couple points off. So it's still going to have to really break through that settlement level. If it does, then the next level is going to go towards is 17.7 for the morning. If it's not able to pull that off and it pulls on back down, expect it to come right on back down to 17.6, right down here where the 0.5 deviation level is, where this whole battle happened, right there. Okay, and also where the low end of ice profile right there has happened at the same time. So we basically have a couple targets. We got it right up here if we break through settlement. And if I was in a long position, I'd be taking profit right now. I'd care a lot less about that small move. And I'd be waiting and watching to see if I could possibly get a pullback. All right, that gives us a nice walkthrough on the Dow. And let me see here. Let me change this on up. We're going into natural gas. Let me make sure. I know we got some stuff that has rolled over. Let me pull it up real quick. And I want to check something before I change up my chart, because that will take just a few minutes. And while I'm going through the report with you, we can let the chart be doing its work in the background. So yeah, let's go ahead and roll on over to September. And let's see anything on CL. We get on that. Okay. So with that being done, let's go ahead now, update our chart to natural gas. Let's talk about the inventory report that came out today. We'll go on into it. And let's see here. Bring this one on up. All right, so natural gas inventories came out. Covered GDP there. We had natural gas storage came out at 52 on an expectation of 53. So that is not much of a difference on the forecast. It is, quite a bit of a difference from the previous number. So how different is it from the forecast? How different is it from the previous number? Was the previous number revised? How different is it from recently reported numbers? It's dramatically smaller than recently reported numbers, okay? And how different is it from just the historic averages? So we can go in and look at the actual report and look at that. This represents a net increase of 52, which is a lot smaller than the net increases we've been having for the previous week. And it says that this year we were at 85. 50 stocks were 586 BCF, higher than last year at this time, which actually would mean that storage is higher than it was last time this time of year. Okay, so there's more, even though stockpiles, stockpiles decreased less. So think about this. That's what I'm trying to help you understand. Well, the number's lower. Why is this? This represents an increase of storage from last week. Stocks right now, the stockpiles of natural gas storage are at 586. That's higher than last year at this time. So not only did they increase, which isn't not as much as usual, but the stockpile, this is the important number, the stockpile is higher than this time last year. And it's higher than the 5-year average. Okay? It does say in the East region, they were a little bit below, not much, but a little bit below what the 5-year average is on the stockpile reserves. Okay, so we look at that and we go, all right, let's see here. The producing regions were above the 5-year average. So I'm seeing a lot of above, meaning we have a lot of stocks. We're still increasing. We're above 5-year averages. There's one area where the stocks are a little bit lower, but that's not near as much. I mean, it's more than offset by what we see in the other regions. Okay? And so if we look at all that fun information, then we go, okay, well, now let's pull up a chart on natural gas. Let's see what happened at 10:30 when this report came out. Because it's not just, and this is a lot of mistakes people make, when a report comes out, it's not just the number. It's also the other information in the report that needs to be looked at, okay? Now, usually that move's going to happen too fast that you can't do much about it anyway. And so let me open the chart up, and we'll check it out. Okay, so right over here, market's just chopping all morning, just waiting for the reserve to come out. We actually do get a break below ice with some exceeding volume earlier in the morning. Pardon me there. Earlier in the morning. And then it goes into just a complete pause mode. Can you say iron butterfly? Okay. Up until about 10 o'clock, it starts to make a little move leading into it, comes right back up, look at that, right back up to ice. And then the release comes out, and it's just boom. And then all of a sudden you see the volume going up. Really not as big of a boom on the natural gas inventory as we see, because it comes out the same time every week, okay? So it actually was a lower than expected volume amount. Now we're seeing this live, lower than expected volume amount. And this is forming a bar every minute for you. And we see it move up. Doesn't really move the expected amount, doesn't move the expected volume, but it does come right up to the lower level of ice and bounces right off of it, starts moving on back down. And volume is increasing on this move back down. Notice it moved up without any normal volume increase right here. Okay? But then all of a sudden it started moving back down, and all of a sudden volume starts going up, confirming that move. We had a little bit of a pullback for like a bar, and then it just started going right on back down. Said, hey, this is just chop. Don't worry about it. We don't have a couple green bars in a row there. And so it chops right back around, keeps going down. Volume keeps increasing. Volume dies off right here. Okay, so volume dies right at this point on the chart and starts decreasing down. How do you know when that moves over? Okay, when you're trading, and again, I talked about this on the Dow chart. When you're trading and you see volume exceeding expectations or not, that gives you a big clue. Okay, this is not going to be as big of a natural gas move as normal. But also, when you see that volume start to die off, and it's at a 1 deviation, which, by the way, this is right at a -1 deviation level, it's time to take profit. And it may be a great time to butterfly the market and take some easy, flat, paint drying cash. So stay right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Popped on right back up. Sorry about that. My mic got muted. So we're talking about natural gas. It popped right on up without any increasing volume at all. Just stayed flat right after the news came out there, like just for an instant. I mean, matter of milliseconds. And then afterwards, we got, pardon me, a declining move where it moved on down, but volume started increasing, and it was increasing the entire time. Moved on down, moved on down. And this is the last part where I was talking right before the show broke, where all of a sudden the volume has declined rapidly, and we're at a 1 deviation level. We're also hitting institutional buy zones, okay? And we create an institutional sell zone as well. So we get institutional buy and sell zones happening right here. This all of a sudden creates a range for us, these bigger, thicker buy and sell zones. We can take advantage of these zones and start doing butterfly trades, or so sorry, iron condor trades. I can't get my finger to that pause button fast enough. Or iron condor trades right in the middle of that. So let's look at exactly how would that work. Okay, if we're gonna go in and we're gonna maybe do some iron condors, then what would be the process, and how could we find an iron condor when we saw an opportunity set up like this? I mean, there are ones I plan out and set up and put together, but also when I see nothing happening, I look at those as well. And sometimes those could be the best opportunities. If, what's like if FX is hopping like it is right now, but like dollar index is moving like crazy, things like that, but the commodities have slowed down, then I can hop on over and trade that. So let me pull up the scanner. Let's go and let's look at the spread scanner. Okay. And how do I keep clicking that link? There we go. And let's see here. We go in and just pull up natural gas. Open that up. All right. All right, see what we got here for dailies. And then we'll put some other pieces together. Let me take a picture of something I see over here real quick. All right, get that done. All right, so over here, we are going to look, see if we can find any positive premium. And again, if we can find any positive premium, I'll make sure I'm going to reset all my settings to default. So if we're going to get rid of the instruments I don't want, get rid of my settings again, okay? All right, so the question becomes, do we have anything with positive premium? We don't. If we don't have anything with positive premium, that means the market's really dead, okay? There is zero expectation of movement. Okay, so first, now we should have done this back around, 11:30, whenever the market, basically right when the show started up. So a little bit before that, I guess. But whenever the market came on down, but also that volume, it continued to decline, but that volume dropped. Okay, and as soon as that volume went sidewards, right there, so we had a peak up and then boom, right back down. So right around here, and we started the chop zone, which is what we got right here. This is where we should have looked at this. So if we were looking at it, what would have happened? Okay, because it's nice to go, well, you should have, could have, but would it really have worked and all that fun stuff? Well, let's look at around 2790. What do we have there? We have a 2800. Let's see, that might be the closest thing we have to the end of the day. So we've got a couple 2800s. Okay, so on these 2800s, here's what I'm going to do. I'm going to look at the 2 o'clock ones, okay, when we get back. And we're going to actually look at the charts of the spreads and see how the price reacted during this flat time and what that would have meant. All right, so stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome on back here to the Diagnostic Trading Hour. And so looking on over here, checking out, we're at a 1 deviation move. So volume came on, like the market came on down hard. It hit a 1 deviation move. That alone is a reason for us to think, hey, it's probably going to slow down. Volume has dropped dramatically. That's another reason for us to think that the market is going to slow down. Okay? Start getting a bunch of chop signs. And so what I want to look at was these 2,800 contracts and see if there's anything there that might be useful. So, for instance, if I click on that, okay, I can't do that at the moment because I have to do an update. Lovely. Okay, here, hold on 1 second. And let me go over here. Let's see if that will work. Okay. All right, let's try it again. Yeah, there's a new enabling feature I have to put in on it. I was going to go through, I was going to show you the iron condor on that. Maybe I can just do it from the other platform. Hold on 1 second. Let's do it outside of it. And over here, okay, so I want to look at the 2800 2 o'clocks first. There we go. And let's change it over to last mid. Always go to mid. Yeah, it's not really giving me any quotes on that one. Let's see if I get quotes on the other one. If I get quotes on one of these two charts, then I can give you a great example. It's almost like it's trying to pull up a binary chart, but it's really confused. One more second. I'm doing all this on another screen, trying to save you any confusion from it. There we go. Okay, that's a little bit better. Okay. So we have this one chart. Let's see if it'll let us open both. Not a big fan of using the Nadex platform. It's clunky, but okay, there we go. We'll put these two over here. There we go. Let me make sure I got both of them on the mid price just to be consistent. Right over here, we'll go this. We'll choose this to mid price. Okay, now let's go back to the time we were looking at. So it's saying right about here, volume's leveled off. You know, so somewhere between 11 and 11:10, easily. We're seeing, very flat markets. Okay, so right between 11 and 11:10, we're seeing really, really flat markets. And the market is at 27.90, give or take, right about that time. Okay. So, if we go over here to 11, and this is the lower spread, so we'll be buying it. 27.90. We got about we can buy it right around 27.80. So we got about a 10 tick edge. 20 tick max profit potential. So 20 ticks of maximum profit potential collecting on 10 pips of premium. If we go on over here. And let's make sure we just line up the best time. So right here we said, 11. Okay, I just want to make sure. And grab the right screen. Here we go. Okay, so right here, actually 11, it's a little bit better. It's around 27.75 to 27.78. So 25 pips, we'll just go with an easy number. 25 pips because you could have bought anywhere in this zone. We'll say 25 pips of maximum profit potential. And then we go over here to 11 on this side. That's 28.07. 28.11 is pretty high. There's not a lot of profit potential in there. I mean, we're talking about 10. So overall, we're looking at about 30 to 35 ticks of profit potential. 35 ticks, it can move up or down from 2,800. So if I go back over to a chart and I were to draw a rectangle, okay, from 2,800 right here, what this means is it can move up 35 pips. Ticks, whatever here. 0.0035. I guess to be really specific on that, but we're down 35 from 2,800, so 27.65. Right there. If it stays in between that range, if you would have gotten this trade at 11 o'clock, okay, this is the power of this, and people they just don't see it, and I try to explain it. But you see it on the indicator with the premium. It'll help you. But, I mean, if I get 35 ticks of max profit between the two, okay? I'm not just talking premium here. I'm talking about max profit because you make that additional money, too, if it goes one way or the other, okay? If I get 35 ticks here of max profit, I talk about this on Iron Condors all the time on news. I'm like, your minimum profit needs to be, which comes from your maximum. Your minimum combined maximum profit needs to be no less than this amount. That range right there, this up 35, down, up 0.035 and down 0.035, that's break even. Anything in between the two is profit. And if I get outside of it, I'm going to lose $1, okay, for every 0.001 it's further outside of it for each contract I do. Is that a trade you would do? Would you do a trade looking at this chart, okay, of natural gas here, going into the end of the day, 2:30 session, okay, is when it closes. It's had its natural gas inventory report, so it had a little explosion, and then it popped down, and then volume just dried up, okay? So a dry lake bed right here, nothing going on. And you can do a trade that inside this range, you profit. Would that be a trade that would be worth considering? Yeah, definitely. So, I'm not have to be a chart master. I'm like, hey, it went down to one deviation. The volume dried up. There's a high, and I got, my charts, I got, a chop indication on there. We're bouncing between a support and resistance. I mean, there's all this stuff I can go into. But bottom line, that's a lot of, it's not going to do anything. Okay? It's not going anywhere, to be a little bit more specific or grammar. Not the grammar. But, it's not going anywhere. I don't think it's going to go anywhere. And so when I see that kind of setup, when I see volume dries up, price drops down, add a deviation move, starting to bounce in between, a supply and demand zone of institutions, that's a great time to look at a premium collection trade. People go, yeah, I want to do that on binaries, on butterflies. Yeah, and I love those too. They're great. But they lose everything. So if let's just say you can make 30 or 40, you could lose 60. Or you get out when it hits it, okay? A little bit more management. I like it, but a lot of times you can get them wider. Okay, granted, a lot of times you can get them wider than you can on, not wider, wider on a shorter time frame. They're more readily available. But they also have a higher risk with them. This is a trade you can put on your stops, go to lunch, and walk away. Where could your stops be? Well, they could be at break even. When I have a trade like this, I go, how much can I make? If I can make 30 pips, I usually like to go in and put my stops at a 1-to-1. That gives me more than enough room, so if it comes out of here a little bit, bounces on back in, I'm okay. And very rarely do I lose 1-to-1. Very rarely do I make the entire 1-to-1. And so usually I make, let's say if there's 30, maybe I'll make $15, $20, $25. But then I can put this thing up 70 pips from where it was at. So I put it all the way up here at 28.70. Okay, so it'd have to break through even, the upper volume level down here. And 70 below, so we're talking 2,800 down to 27.30. So way down here, okay? And that's my break-even levels, which is just 2 times my max profit, above and below my center strike. Okay? I mean, is that a trade you'd be comfortable with, where you make money as long as you're inside this box? 1-to-1 with a stop would be at the edge of this box, and every tick you're closer, okay, every 0.001 you're closer to the center, you make more and more and more of that maximum profit. If those are trades that you might like to do, that could be awesome. And they can even work in highly volatile times. You go in there, and even with a lot of volatility, you can get on a good trade. I mean, let's just take the same box, all right, and let's move it and say you put it on like at 10 o'clock before the announcement came out. All right, so we're going to put it on over here at 10 o'clock. So right there, and we'll say 2,800 because we know there was a 2,800. We go to the end of the day, right? And then let's move this one. This is before natural gas inventories, okay? And you put that on, and you put it on the 230 contract, so way out here. Okay? Grab this one, and I guarantee you would have got more than 30 or 35 bucks, okay? But even if you just got $35, look at what happened. Okay, you're still inside the range. It's come outside of it a couple times, but you're still inside the break-even zone at this point. And if it moves up at all, you make profit. Now, if you would have got 50, okay, let's say you got 25 on average on both sides, okay, then you could go, instead of going 35 below 2,800, you could actually go, what would that be, 50 below, so down to 750 down here. You could have brought this up, if you got 50 pips, up to 28.50. So right there, I think we're going to start our boxes off a little bit odd. There we go. Okay. You can put that on before natural gas inventories. Is that a trade you would have been comfortable with? So, came up, came right up to the range, came right on back down, didn't even break outside of the premium range. So many traders are trying to call direction, or so many traders are trying to get that low risk, high reward, massive payout, win the lottery trade that they miss out on. Like, hey, there's a reason most people lose those, and you could be the guy collecting all that premium. Okay? So, be that person. Collect that premium. Check it out. I mean, this is among my favorite trades. I think if you really watch this a couple times and start realizing what I'm saying, that we want that positive premium, and that was on a flat setup. I mean, this is on a volatile setup, which means I get more, when like a news report is about to come out. But even if it went up here outside the expected range, that still would not be at my 1-to-1 level where I'd be concerned with the trade. So, pretty cool trade that hopefully we can take care of. All right, so let's roll it over. That's natural gas for the day. And by the way, that's every Thursday you can trade the natural gas inventory report. Wednesday, you can trade the oil inventory report. So we actually have really good expected ranges on those. Let's go in. Let's look at gold. And gold moving, positive as the stocks have a little bit of, weight on them. That's apparently the lead line of the day. Okay. And let's see here. Gold turns positive as U.S. stocks fall. They didn't just get hammered, but okay. They love to paint it that way, don't they? All right, let's see here. Where are we at? Speaking of falling stocks and all that, let's do a quick market wrap for you. Okay, we got the S&P right now. It is down 1.25 points. We have the Russell's actually positive territory now, up 3.4. Dow's down 19. Nasdaq's in positive territory by 28 points on the day. Going on over and looking at gold. Gold is currently now, turned positive. Well, now it is negative. So they got to rewrite that story. Okay. And they got to rewrite that story right there on gold, and currently down 4.7 points. So not quite positive anymore. And anyways, going on over to natural gas. Natural gas currently right now is down 0.032. We got oil is positive, barely by just a matter of 6 pips on the day. We'll get on over at corn and soybeans, both in positive territory. Corn up 4 points. Soybeans are up 5. We got bonds in positive territory, up 1.03. And we got the dollar index is moving on up 0.748. Euro dollar right now, down to 83 pips. A lot of activity I saw, as I was mentioned earlier, happening in the FX market. We got euro yen down 57. We got euro pound down 33. Pound dollar down 31. Pound yen is up 26. US yen, everything up against the yen right now at 42. Aussie yen is up 3. Aussie dollar currently down 18 pips, with the dollar franc up 31 and the dollar CAD up 61. All right, we'll talk about a couple other reports when we get back right after this.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
And so now with housing supplies are falling further than expected, Aussie dollar hitting the 6-year lows. Let's go check that out. Let's pull up the Aussie. Probably our last chart of the session here. We got initial jobless claims hovering on up. And then while that's loading, let me go over. I want to pull up this right here. Give me 1 second if I can get to it before the timer runs out. We'll go in and cover our news trading plan. And I always click on the month tab. It gives a little bit cleaner view once I get on that. And then let me pull up. Let's see, we're coming up on a new month here. Got to roll on over here to August. All right. So we're going to have U.S. core durable good orders coming up. And is there anything? Oh, actually, we got a couple things. Tomorrow. There we go. Tomorrow. Let's see here. We got 8:30 a.m. Friday, 7/17. Okay. We're looking for an iron condor for $25 minimum profit. And CAD CPI, core CPI. We're also doing an iron condor on that one for $30, 8 a.m. entry for 10 a.m. expiration. Okay, so we got the 2 reports for tomorrow. FOMC speaker, but not a big thing, just to be aware of the event. Okay. And it's be aware, not beware. Okay, is a big difference. Beware is like really watch out. Be aware. This means, hey, no one's there. Japan's gonna have a bank holiday on Monday, so let's be aware of that one. We got CAD wholesale inventories. Looking for a $30 iron condor 8 a.m. to 10 a.m. expiration, 8 a.m. entry, 10 a.m. expiration for $30 minimum profit. Let's see, going on down, there will be a monetary policy meeting minutes coming on out on the Aussie. And then Monday night, Frank trade balance report. Entering at 11 for a 7 a.m. expiration for a $35 minimum profit. A couple earnings coming up next week. We got Verizon and United Technologies coming out on Tuesday morning. And we got, says Apple and you know what? That's wrong. Those are already out. Hold on 1 second. Sorry, I clicked on the wrong button there for the earnings. For the earnings on Tuesday morning. Okay, here we go. Tuesday morning, we're going to have Pfizer and Merck are the ones coming out. Okay, so just check all these against your news point just in case I double clicked on something there. Pfizer and Merck, though, are coming out on Tuesday morning. And on Tuesday evening, we got Gilead coming on out. Is that right? And you know what? I'm gonna scratch all this. I'll cover it tomorrow because I think I keep pulling up the wrong calendar on the earnings reports because I'm looking at it and I'm like, you know what? I think that was actually this Tuesday. Sorry about that. But we do have a ton of great straddles though coming up this coming week. I got a lot. We have a straddle on the 2nd, okay, on the pound for 11 to 7. Usually we have iron condors. This is a straddle. Okay, so we have a straddle on Sunday night, 11 p.m. to 7 a.m. These are accurate dates. 11 p.m. to 7 a.m. Right there on the pound. And yeah, we're going to have a lot of straddles, so I'll be able to cover a lot of these with you. On Wednesday, we have another one on the U.S. trade balance, on the euro dollar, $40. We got another one on the CAD trading balance, okay, also 40. And we have one on oil inventories set up. So we have 4 straddles next week, which is really, actually we have 5. We have another one on Thursday. So we have 5 straddles next week, which is a lot. And so I'll fill you in on the next show. Y'all stay tuned. Sorry about the confusion there. Y'all have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.